Is Tesla's stock about to face a massive crash in 2025? That's the million-dollar question. Analysts have been raising red flags, investors are debating fiercely, and social media is buzzing with predictions. For years, Tesla has been the golden child of Wall Street, a company led by Elon Musk, a man often described as both a visionary genius and a high-risk gambler. Tesla revolutionized electric vehicles, pushed energy storage forward, and even dived into artificial intelligence. But now, some experts believe Tesla's stock price is way ahead of reality. Others argue this turbulence is just the calm before the next big surge. So what's really going on with Tesla, and what should investors expect in 2025? Let's rewind a little. Over the past decade, Tesla went from a niche startup producing expensive luxury EVs to one of the most valuable companies in the world. Its stock has been a roller coaster ride. In 2020 alone, shares surged over 700%, turning ordinary investors into overnight millionaires. Tesla wasn't just selling cars, it was selling a dream of a cleaner, smarter, and AI-driven future. Investors believed in Elon Musk's bold promises, from mass-market EVs to robotaxis to solar-powered homes. That faith paid off, at least for those who got in early. But with that rise came new concerns. Tesla's valuation has often dwarfed traditional automakers. Ford, Toyota, and Volkswagen usually trade at P/E ratios of 10 to 15. Tesla. At times, its P/E has been 60, 80, or even over 100. What does that mean? Investors are paying huge premiums for what they think Tesla will become in the future, not what it is today. To justify these sky-high numbers, Tesla would need to dominate global auto sales, lead the energy storage revolution, and crack the code on fully autonomous driving. That's a tall order, even for Elon Musk. Now, let's talk about the risks for 2025. Rising interest rates worldwide are making loans more expensive. That affects both consumers buying cars and companies financing expansion. Electric vehicles are already pricier than many gas-powered cars, and higher financing costs could slow adoption. On top of that, competition is heating up like never before. Chinese giant BYD is gaining ground fast with affordable EVs. Legacy automakers like GM, Ford, and Volkswagen are investing billions into electrification. Unlike a few years ago, Tesla doesn't own the EV market anymore. It's fighting to keep its lead. Then we have Tesla's own promises. Cybertruck finally rolled out, but it came with production delays and mixed reviews. The highly anticipated robotaxi network and fully autonomous driving software are still in development. And while Tesla has made huge strides, regulators and safety concerns could slow things down. If these projects underdeliver, Wall Street could lose patience quickly. Remember, Tesla's stock has always been fueled as much by future promises as by present results. But don't count Tesla out just yet. The bullish case is still compelling. Tesla is not just a car maker. It's a technology and energy company. Its solar division and Powerwall batteries could become major players as the world transitions to renewable energy. The Dojo supercomputer could give Tesla an edge in AI and self-driving development. And if Tesla cracks autonomous driving at scale, it could launch a global ride-hailing network that competes with Uber and Lyft, but with far higher profit margins. For bulls, that's not science fiction. It's the next trillion-dollar opportunity. So what should investors actually keep an eye on in 2025? One of the most important factors will be Tesla's quarterly earnings and delivery numbers. Since these reveal whether sales and profits are continuing to climb or beginning to slow, global EV adoption trends will also play a major role, especially as government subsidies, tax incentives, and shifting consumer demand directly impact how quickly electric vehicles are embraced worldwide. Another key factor is interest rates. Higher borrowing costs can reduce car affordability and cool demand across the entire auto industry. At the same time, competition is intensifying, and investors will need to watch closely to see whether Tesla can maintain its market share, or if rivals like BYD, Ford, and Volkswagen begin to take a bigger slice of the pie. Finally, breakthroughs in AI and energy could be game changers. Major announcements in self-driving technology, solar, energy storage, might reignite investor excitement and help justify Tesla's high valuation. History offers a warning. We've seen great companies with overhyped stocks before. Remember the dot-com bubble? Amazing businesses with real potential collapsed when reality couldn't catch up with sky-high investor expectations. Bears argue Tesla could follow that path. Bulls counter with another example: Amazon. In the early 2000s, many thought Amazon was overvalued and destined to fail. Instead, it became one of the world's most dominant companies. Could Tesla be on the same path? So, is Tesla heading for a crash in 2025? Or is it just misunderstood by cautious analysts? The truth is, nobody knows. What we do know is Tesla remains one of the most exciting, polarizing, and volatile stocks on the planet. The debate between bulls and bears is far from over, and investors must decide whether Tesla is a bubble ready to burst or a once-in-a-generation opportunity. As always, the smartest approach is to stay informed, balance the hype with data, and avoid extremes. Don't fall for blind optimism, but don't dismiss innovation either. Watch the numbers, track the trends, and most importantly, invest wisely.